full top down approach, full top down system. All I ask is for people that are watching me. We're live streaming right now. We're live streaming towards Twitter and towards the chat room. If you're watching me on Twitter and if you get some value out of this, be sure to go ahead and comment the value you got out of this. Now, I didn't put a disclaimer in here, and I'm going to verbally go over the disclaimer. So, long story short, trading's risky. Nothing works 100% of the time. Past performance doesn't guarantee future results. All that yada, yada, yada. Trading's risky, but if you like risk, come to the right place. Now, we're going to keep running October. It's been a great. We got to meet a lot of new guys and gals here. We all in WAP, highly rated. Love to, again, as you guys are coming in and reviewing the room, love to get your feedback on this WAP page. We are the #1 day trading live stream community. I do call out trades real time. I do give you a pre-market plan, and I use the strategies that I'm about to teach you every day on live stream inside of our Discord, real time, all the time, for you. So again, if you use code Juicy50, you'll get 50% off. Sorry, I'm just responding back to somebody else. So let's go ahead and get into it. We're going to go over the agenda, which is going to be the top-down approach, which is going to involve the ERL, IRL theory. Now, again, a lot of these concepts are stuff that I've blended. Okay, I blended ICT concepts with some supply and demand concepts and made the system that I trade a little blend of stuff. Big shout outs to the MXMM trader for popularizing some of these concepts. But again, the root of the place came from ICT. So today, and the reason why we want to take the time to go over this is because we oftentimes are watching me trade live and we forget the fact of the matter is I'm still using the higher time frame analysis to get to the conclusions on the lower time frames. If you come in on live stream and you're not going through these type of mentorships, you just see me executing. And when I execute, I do prefer to execute on a smaller 1 minute time frame. But everything that I'm executing from was from the higher time frame system, which I'm about to break down. So today we're going over external, internal, we'll go over time frames, we're going to go over structure, we're going to hit supply and demand, which is the order blocks inside of the legs. Then we're going to go over 1 and 2 models. Then we're going to go directly into today's trades, into today's action. Everything that I'm about to show you in this PowerPoint, I'm going to piece it together for you for tomorrow. So first things first, market structure is very important to me. At any point in top-down process, the higher time frame structure will deliver the lower time frame order flow. The lower time frame order flow will deliver the higher time frame structure. Structure is very important because it's going to show you which way order flow is going, and the points of interest that are bullish in the uptrend will probably cause you to reverse when price pulls back into them, and vice versa for the downtrends. So long story short, and again, I got a lot of more advanced people in here, so I don't really have to spend much time here. If you're newer, DM me, and I can go ahead and get you past this concept. But long story short, here's a price schematic. Price going up, price pulls back. When price takes out this high, that's a break of structure, and this is the valid low. As long as this low is intact and you're taking out this high, you're in an uptrend. Okay? So price is going to continue that process. Okay? Over and over and over again. And that is the external internal range theory. External liquidity is liquidity that will be resting at the previous highs. And the internal range is the ones that are in the low. So long story short, if price is moving up in the trend like this right here is going to be your external range. That's your external liquidity pool. Once we pull the sellers here, because the sellers that got in here, they sent price down. Okay? And inside of this leg here, and it's already getting messy, between this low and that high, when price pulls back here, it's going to look for something in here. So if you look at this schematic, here's your external, here's your sellers. Sellers push price down. Inside of this leg, what's open? You're either going to have an order block or an IFVG or an FVG that price is going to gain support from. Okay? That's your internal range draw. Work with me, stick with me as we continue to go through this. External range, that high, pulls back internal. Inside of this leg here, what's inside of it? That fair value gap. That fair value gap causes price to bust that external range high. And it's the same thing. Fair value gap. External range high. Fair value gap. puts a big ass high up, but you get the point of the matter is that's the continuation of order flow. Now, since price is fractal, it works on one time frame to theoretically work on every time frame. That means the theory of ERL and IRL so theoretically work on every time frame. However, we really want to combine 3 time frames to give us a bigger picture. For me, it depends on what type of market I'm in. I'm either using the monthly, daily, 1 hour in execution time frames. When I say execution time frames, I'm looking at a 1, 3, or 5 minute because that's where I'll be at. I can look at a 1 minute time frame and tell you what's going on a 5 minute time frame. So that's why I'm always on a 1 minute time frame. But everything on the 1 minute time frame came from the daily or the 1 hour. The other time frame alignments, the weekly, the 4 hour, the 15 minute, and the execution time frame. I prefer the daily, 1 hour, and execution time frames. Those are my preferred method. So when I come in to the day, my highest time frame, let's say this is my daily chart. And again, I'm running through this kind of quick. This is my daily chart. This would be my 1 hour chart. And this would be my, I'm going to just call it execution for E. I'm looking to frame everything on how the market books. It books internal, external. That's just how it works. So because I got sellers here and I'm bullish in the trend and we're in this external range, I'm going to have that daily PD array marked over into the 1 hour chart. And that 1 hour chart is going to have this as my external draw, which is these highs from this particular chart. If I'm confusing you, just continue to ride with me as we move on into the actual charts. This will make perfect sense, but I got to get through the textbook stuff. But once we get through this, is what on this time frame leaks over here. From the 1 hour time frame, you have the market structure shift. If I'm bullish, this is the confirmation. We'll talk about that here when we get behind the charts. I'm taking that 1 hour PD array from what? This is external. This is an external pull right here. Creates external liquidity, internal range draw. And on my lowest time frame, I'm looking for my model, whether it's a breaker, unicorn, or the TRIL model or the ICT 2022 model. I'm looking for one of those 3 models inside of this framework. Okay. So what's that look like on the schematic, guys? If this is your daily chart, or let's say this is your 1 hour chart, your daily chart or 1 hour chart, this is your HTF chart, higher time frame chart. I can't draw today. You'll look at this and say, hey, it's uptrend, internal draw, respect it. Uptrend, internal draw, respect it. Uptrend, internal draw, respect it. Uptrend, price is coming back to that internal draw. Now look here. This red line will represent your higher time frame. This PD array comes from the higher time frame. All I'm doing is waiting for price to pull back into that area. That area is called your point of interest. The best trades, the bigger trades, those 100 handles, those 200 handles are going to come if you're bullish on the day. You have a higher time frame point of interest. And if you are bullish on the day and you have a higher time frame point of interest, a run on sell side into that point of interest all day. Hit that trade like today. And we'll talk about today's trades here in a little bit. But long story short, this is just a brief overview of what I look for. Now, as a checklist, higher time frames, where are we? Are we internal, external? Mark your higher time frame PD arrays. Go to your middle time frame chart. Does the current market structure align with the higher time frame charts? If so, go ahead and mark the PD arrays. Wait for price to come into the PD arrays and wait for the model on the lower time frame. It's literally that easy, all right? Over and over and over again. The same way I was able to just run through this really quick is the same way you could get through this too as well. We're going to go ahead top down and hit price review today. And I'm going to break down every aspect of what I was looking at coming into the day. We just got to go ahead and make sure we get to the right time frame. So this is replay mode. 9:45. Dude, today's Wednesday. We're moving very quick. So we can go straight to 9:30. Okay. So this is the 9:30 candle going to the daily chart. Okay. So for me, I'm actually going to start my whole top-down analysis from the monthly chart. So for me, I'm going to mark this off as my external high. All right. This is my external high. So I'm going to call this bullish ERL. Here is the order block. That price somewhat swept below, but still stayed above it. It's the The wicks do the damage, but the body tell the story. All right. So here, I'm going to put this as monthly order block. Okay. I'm going to go down to the daily time frame. Which way is trend? Where is higher time frame, internal, external? This is the weekly, this is the monthly externals draw. This is the monthly order block. So let me just clean this up a little bit here. We've already tagged down into it, so I can leave that there. But this is your monthly area. This is your order block. Where's your structure at? Bullish structure. You even got a series of higher lows. Not looking at ES, I can't tell you if that's SMT or not, but you got a series of higher lows. So if I know price is more likely to go back to here, not just because it's all-time highs, but because it's the monthly's higher time frame, external range draw. Here, I'm looking for internal, external there. What do you see on this chart? Before I point out this current price leg, in the trade room, we've been talking about this all week. We've been looking for price to come in, grab it, grab internal, and then go back to this high. Yesterday, we got that. Very clean play. We finally got delivery there, okay? But what else do we see inside this chart? Here, your fair value gap. And more importantly, here, you get an order block. An order block inside of that fair value gap. So that right here, sorry, I a little bit down. Time frame. Delete this, sorry. Back to the daily. This order block here, see if I can get the right label. That's going to be my internal draw. Okay. Now, prior to today, because this is replay mode, this candle hasn't established yet. This candle was actually up and pulling back slightly. So for me coming into today, I had two different narratives. Narrative number one was price to continue to go to this highs. These highs here. Because we tagged this internal fair value gap. So I'm looking for price to go here. If market structure becomes bearish at all on the 1 hour time frame, I'm looking for the internal range draw here. Okay. Go to the 1 hour chart to confirm. The 1 hour chart, the middle time frame, in my opinion, probably the most important time frame. Because whatever structure, whichever way structure is on this time frame, that's where I'm trying to line towards. The highest time frame, the daily chart, gives you the bias. The 1 hour time frame kind of gives you the context. Okay. So this is the very first candle, and as we know today, because we were live streaming, we know that price pulled back. Prior to this, I was looking for price to come into one or two areas. This is called the breaker. We will be doing another lesson on breakers here. I was either looking for price to come into the breaker or the fair value gap right here. We can label this, label everything right. And label this. I got 1 hour breaker. Okay. These are my two areas of interest, and I'm bullish on the day. Where else? Where am I looking for price to head? I'm looking for price to do one of these two things. I'm looking for price to do this, or I'm looking for price to do this. There is a bearish scenario, but that will be on a different lesson when we start talking about changing biases. Coming into a 15-minute chart. Everything for me is set on the chart. This is all I really need to make money here. Once I get my charts like this, I'm pretty much good. I got a theme. I got a higher time frame analysis. I'm pretty much rocking and rolling. I want to go down to a 5-minute chart just to go over one thing. Today we had some obvious areas of liquidity being drawn. Here's London high. Still intact, meaning we did not sweep London's high. So that's going to be what? LQ. I thought I had this here. What? I didn't have this here? No, I'm tripping. Yes, I do. I have it right here. All right, so that's London's high. This is going to be our 1 hour external range high. We've already pulled London's low, but look at Asia's low right here. Okay. Okay, so coming on to the 1 minute, looking to execute. So if I'm bullish on the day, what do I want to see? I want to see a run on sell side and delivery. Where do I want to see delivery? I got London high open. This is a data high. This is relative equal highs. I got all this top side liquidity here. Higher time frame narrative is bullish and price is pulling back below midnight open. In my opinion, we're in a discount. But this is where people get tricked up at here. Because price is going to open and everybody's looking for the long right off the rip. You have to allow certain things to happen first. And this is why I prefer to use macros. Now, I'm not out here to give out everybody the sauce, but macros have taken my trading to a whole different level. And depending on the type of feedback I get here and the type of feedback that I get just in general, maybe I'll release some of this stuff to the public. If not, you can go try to look it up on your own through ICT's material. This is what I call the opening drive macro because this is the opening candle. 929. Everybody on the team is locked in today. We know what to look for. Let's execute. Price right off the rips going down. I'm bullish on the day. Price going back up. I don't have any setup. I could frame something. I could force something. Here's what I could force. You see these two gaps here? I could frame and force an IFVG right here. And you could say that this high to this low, you can call this a range right here. Call this a small dealing range. So if you do sweep that low, you could be looking for price to do this. What does price do? Rejects that fair value gaps and goes lower. At this point, I have no trade. The price continues to go lower. The amateur trader is going to sit here and go crazy. Be like, yo, it's moving. I'm not in it. And then maybe they get short like right here. Easiest way to get clapped. You got no setup. Got to wait on the setup. I got a plan in the narrative, so I'm going to wait on the setup. Price closes below this 1 hour breaker. I am done with it. See what price does here. Here's a 1 hour BISI. At this point, I'm just going to wait for price to touch it. Price now in the BISI. What's my next macro? It's 950. 10 macro. The thing about macros is I have to wait. It's win advantage. Gotta wait to 9. I gotta execute, try my best to execute in this window. Guess what? I don't have a setup either way, and I got FOMO. If you have FOMO. So now you're seeing yourself, I just gotta wait for my next macro. Price. Gotta wait either way. Touches this gap, and now we're in the macro. What's going on now? Here to here is your inversion gap. All three. I'm going to show you a quick little trick because I know somebody in the crowd's going to say, yo, this gap right here is too big, bro. It is big, too. And if you try to take this inversion gap, and again, I'm speaking to you guys from an advanced standpoint. I mean, speaking to you guys from the point of you guys have been through mentorship already, and you guys know that, for example, price has to close above and retest the inversion gap to get in. If you are confused about those concepts, please DM me if you're gold. If not, please DM me on Twitter. Get you set up. So I need price to get above this fair value gap to execute. And if that happens, I got three clean draws of liquidity right here. Super clean. So price, let's see what it does. Gets out. Okay. Now who's ready for a pro tip? Anytime you get a giant gap like that, if there's a BPR, and again, I'm not going to go into a BPR, what a BPR is. If you get the BPR, you can take the BPR entry. That BPR should hold. You got touch of the higher time frame, internal draw here. We know we have external there, and I like these collection of highs here as an area to scale out. If I touch this yellow box at all, we're getting long. From here, that's your entry. Candle red, get long. Bam, in the trade. We're in. Okay. I'm targeting London's high. Am my risk is going to go below these wicks here inside this gap, below the 50% of the gap, below these wicks? There's an order block right here. Order blocks inside that fair value gap too as well, right? What is this? 4 to 1 R, 4 to 1 R, 4 to 1 R. Now, I'm not holding the whole position. When I trade like this, I got limit here. I got a limit there. I got a limit there, here. And the rest are going to be runners to London high. And at the same time, I'll be moving my stop loss as things are happening. Okay? So we're in the long. So from here, price pulls back. That's your target. That's your first scale. So right there, you should scale out. And let's see. Price. Ugly. Let's see. Almost. That would have got you break even. So from here to there, your target one, this would have been your capital here. After you go to target one, I go to break even every time. All right. So that was my only trade. That's your trade. Clean move. That's trade one. I'm going to show you trade two right now. Trade two was based off me being stopped out at break even and then realizing we put in this new dealing range. Now, once we swept this range, what time is it? 11:20, 11:40. This is our next macro, and we're going to be looking to execute because we swept this low to see if we can get this high. So for me, this area here, another inversion fair value gap. See if we can do it. All right, let's zoom in. One price close above and retest. That's your closer above. Wait. I think this is close above in retest. Yeah, this is your close above in retest. So this is your long. Stop at the bottom of this order block here. And there's your two targets. So let's see what price does. Here's where I would scale out and go break even right here. These are two relative equal highs. Stop loss goes to break even. Got tagged out break even, right? You didn't get full TP, right? Those are two clean trades that you could have took today, and if you, depending on the size, you would have easily passed an evaluation or made progress towards your payout. Every day I execute just like this. Some days I get 100 handles. Some days I get 40 handles. Some days I get 20. Some days I get 240. Point of the matter is, I'm waiting for all of these things to align. And when all of these things align, they give me the highest probability of winning. I use the higher time frame market maker framework, and I combine that with my own execution models around certain macros, because in certain macros, especially the 20 to 40 macro, I'm looking for a market structure shift. In the 50 to 10 macro, I'm looking for expansion or high side delivery. By doing this, you ensure that you have a repeatable process that you can come in and execute every day, and you don't have any fear executing because you're waiting on everything to line up. I only try to trade 1 to 3 times per session with this particular model. If it's not hidden, if I can't develop a higher time frame narrative, those days I only trade on evaluation accounts. I'm either going to trade on an evaluation account, or I'm just going to size down and trade maybe macros that day. I'm not really looking to go heavy those days. But the days like today, when everything lines up, I'm looking to go my live personal account, and I'm looking to hit things heavy. So that was today. Pretty much a great day across the board. Besides that, does anybody have any questions? Now we're going to move into Q&A. Hit me with a 333 if you're all good inside the chat room. If you enjoyed this presentation, small presentation, only took me a couple minutes to put together. But if you've enjoyed this particular presentation, I would love to hear and get that feedback from you. If you're inside the Discord room, I hear people typing, but I'm not sure where it's at. Oh, what up, Joe? I see people typing. There you guys go. Yeah, we're using the main chat. I see people typing in the mentorship chat. But if you enjoyed this and you're all good, let me know. Looks like people in the chat room are good. People in the chat room, you guys know how I trade. We do this every day. On Twitter, if you guys are looking to learn more, ask me questions. Now, Brightman says he has a question. Brightman, was talking here. I got a question about macros. Again, I have this screen on a different screen here. Talk to me about macros. Parish is typing. What's up, Parish? I hope you're well. I'm just going to let these guys type. I'm waiting on them. I'm waiting on people to type. By the way, guys, got any questions? It's now Q&A time. Q&A time. Okay, how does the win rate change for the same setup with TRIL when it comes to in and outside of the macros? I completely buy into what you teach about the rate on liquidity and then the reversal, but why does time matter so much? All right, time does matter because time, algorithmically, certain things are going to happen at certain times. People don't like to believe that or admit that. But indirectly, we all use time. For example, why do you trade futures? Why do you trade between 9:30 and 11:30 and not trade at 6:30 at night? Because time actually matters, because time is going to reference something. Liquidity. You look here and you go back test this, look at what happens inside of macros. So this particular trade was done in the 1050. What happened? The 950 to 1150 macro. I'm sorry, 950 to 1010 macro. Then you have the opening drive macro, right? I shouldn't be talking about this publicly. This opening drive macro is going to give you a Judas. When higher time frames, the cleanest moves are a trend and then a Judas in the opposite direction. So today we had an uptrend, and then you get the 930 Judas. That Judas, because the higher time frame alignment's there, that 930, that's going to get delivered. If you see that Judas in that 950 macro, that's when you're going to get delivery to the opposite end. Because that macro is the continuation and expansion macro. If the opening drive macro does not deliver, then the 1050, the 950 and 1010 macro more than likely will not deliver anything. And it'll be the 20 to 40 macro, which I'm looking for a market structure shift macro, going from a downtrend, sweeping. And again, we swept in the 1054 area. So the 1050 to 1110 created liquidity. And then we got the sweep. And then the 20 to 40, I'm looking for a market structure shift. So again, 930 Judas. If the Judas is there, 50 to 10 delivery. 930 is manipulation. If you don't get none of that, the 20 to 40 is going to give you that manipulation. So I'm looking for certain things to happen based off what previous things have happened. And if nothing's going on and I can't frame anything, then boom, I don't want to trade. Next, the key thing about macros is it forces you to wait. Forces you to slow down. Will you miss moves? Yeah, I will miss moves due to time. But if I don't have a filter around my trading, I can easily, I promise you, I can easily just go on tilt, just start trading 90 different things, revenge trade. Macros keep me aligned and they give me an advantage. All right. The break of structure, the IFVG and the breaker, is that your A plus size? My A plus size is when I have a clear bias, like if I have a bullish bias and we have a pullback into internal range. If I got to pull back into internal range with a run on sell side, first inversion I see I'm getting A plus, fully sized, because I'm buying in a discount at a high probability area. So these are all very great questions. What other questions you guys got? Twitter, hit me with a 888 in here if you're liking what you're seeing. If you have any questions, let me know. I did put a discount code to our team. Feel free to come trade with us. We'll be live again tomorrow at 9:15 a.m. And besides that, let me know. Everybody's good. What kind of questions we got? You guys got. If you guys are all good, hit me with a 222. Hit me with that 222 if you're all good, and then we'll go ahead and shut down, and I'll be live again. Now, Friday, again, I'm leaving. Tomorrow and Friday, I'm leaving early. I'm only trading AM sessions, and I'm out. Monday, we'll be back full time. I am leaving small vacation this weekend. Family. Appreciate you, Bright Man. Appreciate you, Scotta. Appreciate you, Bubba. Mind Trends. Keep up the good work, Mike Mind Trends. I see you on Twitter, bro. I see you doing your thing, brother. Keep up the good work. Good to see you, Michelle. KJ, you a monster, KJ. KJ in the chat room today. Can I show him, KJ? Can I show him what the man, the legend KJ's doing? Oh, man. Can I show them? How can I go back? I done said it now. People will be like, show me what? What you gonna show me? Can I get some people? There you go. This was from the live stream earlier. Okay, yeah, KJ, man. Just want to say, keep up the good work, and everybody else that was printing today. Big shout out to Skrilla Scott too as well. Big shout out to KJ again. Damn, KJ, you got all three Apex funded futures and Top Step. Fully funded, bro. Good stuff, brother. And everybody else today who was printing. So good work to everybody. Besides that, I'm rolling out of here. I'll see you guys tomorrow. It's been a great live stream, great week. I hope this has helped. And I look forward to doing this again with you in the morning. Be easy, everybody.